Good morning, everyone. Welcome. Thank you for joining us for today's annual general meeting. My name is Ben Larkin. I'll be your chairman for today. May I introduce my board colleague, Lynn Golby, who joins me here at Albion Capital's offices in London. Patrick Reeve and Lord O'Shaughnessy have joined as panelists. You should be able to see all the board members on the screen. Joining us later will be Will Fraser-Allen, the managing partner of Albion Capital. As with last year, as a consequence of the pandemic, the AGM is being live streamed for the internet to give shareholders the best opportunity we can to take part in the proceedings. Given the government measures, the current government measures in relation to public gatherings, the meeting will be convened with the minimum necessary attendees. So 2 directors, who are both shareholders, and a representative of Albion Capital Group as company secretary will be attending. The quorum for this AGM is 2 members entitled to vote in person or by proxy. This has been met, and therefore I declare the meeting open. Separately, you will note from Resolution 13 that the board is proposing to change the Articles of Association to allow for virtual and hybrid meetings to be held in future. This should allow continued shareholder engagement. Interestingly, it appears that many more shareholders are actually participating in the live streamed events than has historically been the case for physical meetings. Please can I ask you that you use the hop-in chat function to send questions through to me. To do this, go to the right of your screen, click the Slido button, and you will be able to type your question there. I would like to take the opportunity to thank shareholders who've already sent their questions through to my chairman email address. We will seek to answer a selection of these questions shortly. Notwithstanding this, the board is particularly pleased that we're able to continue engaging with shareholders during these unprecedented times. And I do hope at the end of the AGM, you will give us any feedback you have to the same email address. Before we start on the formal agenda, there will be a short presentation from Will Fraser-Allen, Managing Partner of Albion Capital. Over to you, Will.
Ben, thank you very much indeed. So welcome to everybody. For those who don't know me, I'm Will Fraser-Allen. I'm the managing partner of Albion Capital, the manager of this VCT. Little did I expect that we would still be unable to meet in person, but I'm delighted that so many of you have been able to join us. So I will now give a presentation where I go through the results of the year for the year ended 31 December 2020 to bring you all up to speed on developments. Next slide, please. We'll look at the highlights, and then I'll run you through all the key things that have happened in the year, also looking at some of the exits we've had, some of the investments we've made, and then touch on our ESG strategy and prospects going forward. Next slide, please. So we have ended the year with net asset value of 82.42p. I think this slide shows a performance that I'm really quite pleased with, given just how unusual the last year has been. So to be delivering a 3.82% return and being able to continue paying our target dividend of around 5% of NAV is credible, given the challenging times we've had, but I will able to speak to some of the benefits and some of the positives that have come out on the next slide, please. So we understand a bit better what the impact of COVID is. The early months were quite challenging as we learned to adjust to the new way of doing things, particularly on new deal doing, and also trying to get a handle on the impact on the portfolio. But we have been fortunate that the portfolio had been designed to be resilient. We didn't know it was a pandemic we were planning for, but its resilience has worked, and we have undoubtedly benefited from the elements of our portfolio in healthcare, software, and indeed renewable energy. But on the positive side, and Ben alluded to this in his introduction, we have seen an increase in the shareholder engagement that we've had through the virtual meetings that we've been holding. And with the average audiences of increasing by over 150%, we're delighted that so many people are able to share with us the progress of the fund. And we also found that in the fundraising, where we moved every single application for subscribers wishing to subscribe to share online, so there was no physical paper involved, no physical checks. It was all done online. It worked very smoothly, very efficiently, and the feedback I've had from shareholders has been excellent. Next slide, please. Terms of performance, those who've attended AGMs with us before will be familiar with this slide. But pleasingly, we're still maintaining over a 70% return over 10 years to December 2020. And indeed, I've put in a column here which brings in March 2021, where we have just announced an updated NAV, and I'll pick that up in the final prospects. But we still maintain that 70% over 10 years, and which easily exceeds the target dividend of 5%. Next slide, please. Picking up the main highlights of the year, we did another fundraising, and across the Albion VCTs, we raised 58.5 million in very short order, as we enjoyed great support from our shareholders. This fund raised 10 million, slightly up on last year, reflecting the opportunity that we see in the market to do some really interesting deals, more on which later. Exits were muted. I wasn't surprised by this. I think in the same way we found that there was some adjusting to do. I think the M&A market generally was quieter in 2020, but we have seen an uplift in 2021. And despite this, we still managed to do a couple of good exits in the form of G Network and Clear Review. Again, I have some slides on that. Investment rate at 5.2 million, slightly down on last year, but still demonstrating that we were able to quickly return to doing new investments despite pandemic. And we continued to buy back shares at a similar level, and we paid out dividends in line with our policy. But the performance was marginally ahead of the hurdle for the performance incentive fee, which has given rise into a fairly modest performance incentive fee, but one that we're pleased to see in the circumstances. Next slide, please. Next slide, please. Picking up the construct of the portfolio, you will see that we are holding a cash at around our target 20%, and that does go up post the fundraising that completed this February to enable us to continue our investment program. What you'll see is the delivering on the strategy, which is to increasingly focus on software and other technology and healthcare, which now accounts for some 58% of the portfolio, up from just under 50% last time, and our renewable energy assets reducing slightly relative to the portfolio, reflecting a slightly larger overall NAV. Portfolio of 58 companies, so very diversified, and employing some 3,000 people, mostly in the UK. Next slide, please. Looking at how that portfolio is constructed in two ways, trying to give you a sense of how mature the businesses are that we're invested in, as a way of managing the inherent risk that is associated with a venture capital portfolio. We measure this in two ways. We look at sort of revenue within the business, but we also look at it in terms of employees. So keeping an eye, particularly on the sort of early stage, which is revenues less than $1 million, and employees under 20, because by implication those are the earlier stages, and sitting on those two measures at 16% and 5% respectively, keeping that exposure at a relatively low level within the portfolio, but an important part of the portfolio as it drives significant growth as those companies grow. And you see that in terms of the level of the portfolio in scale up and growth, which is revenues over 5 million and 1 million, now totaling some 84%. And that is reflected similarly in terms of employee numbers, with 49% now with employees of more than 50 million. So it's a portfolio that is spread across sector, as demonstrated on the previous slide, but also nicely spread across earlier stage and later stage businesses. Next slide, please. What we are seeing, though, and this is very much in line with what you as shareholders should expect as we move to more of a technology and healthcare portfolio, is that you will start to see the businesses that are doing particularly well, we'll call them outliers for want of a better expression, will become increasingly important to the return generation of the portfolio, and they will form a greater concentration in terms of the NAV. And the three I have highlighted, which are our top three investments. Many of the names will be familiar to regular attenders. Egress, which is our email encryption business; Quantexa, which is a data analytics business detecting financial crime; and Pravica, which is our specialty pharmaceutical business in pediatric medicines, have done extremely well, and correspondingly they are becoming a significant part of the portfolio. So the total book value for this fund is 21 million against a cost of 6, and that does represent 27.8% of the net asset value. So these are becoming a significant feature of the portfolio, but also have the potential for delivering growth if they continue their trajectory, which, you know, by both revenue growth and employee growth is substantial. Next slide, please. Looking at new investments, I picked out a couple. Consiris is a great example of our investing in software with recurring revenues that are looking to change how businesses, how sectors operate. So specifically, this is in the area of insurance, and it's bringing huge amounts of data and analysis of that data to enable these insurance businesses to better price risk and price it in a more accurate way, because they've got the data to do it. And this is particularly in marine insurance and commercial motor insurance. So this fund contributed 575,000 of a 5 million investment across the Albion VCTs, and that is to grow that business, to build up the team, and further to develop the technology to make it more and more applicable to their customers. Next slide, please. WeGift similarly. This fund invested just under 500,000 in a 4 million Albion round, which formed part of a larger round. And what WeGift does is it allows enterprises to manage how they use gift cards and other rewards. So the difficult bit they've done is they've signed up hundreds of different retailers and others that provide gift cards, and then it allows corporates in a highly automated way to use those gift cards, for example, to incentivize employees, so giving out gift cards in recognition of performance, but also equally important that they're used by corporates as part of their marketing activities. So you might be a financial services business as part of signing up new clients, offering them gift cards. It is a huge market. It's a market that historically has been very non-digital. This provides digital access to a huge inventory of gift cards. Next slide, please. I won't go into detail on all of these, but just an example of 4 other investments we've made, covering fintech, also covering our digital health in the form of UMed, which is helping recruit for clinical trials in a particularly innovative way, but also looking at some very tech-heavy businesses like Transfig and Selden helping enterprises deploy machine learning models. Next slide, please. We continue to invest in our portfolio, and the core part of our strategy is that where we back businesses, we are looking to continue to back those businesses as they grow as they develop through their life cycle. Contexts are UMO2, Phrasey being examples of the total of 3.1 million, where we've backed existing portfolios very much with the desire to help them grow and develop over time. Next slide, please. So looking at our realizations, our exit in the year, I start with our decision to no longer invest in UK equities through the Olim UK Equity Income Fund. This was a fund that specifically invested in UK equities, FTSE 100 and FTSE 250. It was managed by Olim, which was an in-house investment manager. Sadly, it's had a very difficult time. The combination of Brexit followed by COVID, the UK equity income sector has had a torrid time, and this fund was not immune. Our reason for investing in it had been to put surplus cash awaiting investment into income generating investments to help income for the fund. Sadly, the investment has proved to be a less than good one, both in terms of capital loss, but in line with many companies in the UK, we saw a sharp fall in income. So it was neither delivering an income return nor a capital return. So given the opportunities elsewhere, we took the difficult decision to dispose of that stake. It has given rise to an £800,000 loss, which is clearly disappointing. But we have also closed down the Olim business, and those clients have been transformed elsewhere. The decision now is to very much focus on those unquoted growth companies where we are seeing decent returns. Next slide, please. On a more positive note, we saw a very strong exit from G Network, which was our provider of fibre broadband in central London, so digging up streets to put in fibre infrastructure. That business we backed very early on. We invested just under 5 million. When all the proceeds of this sale are received, we will have delivered 3.8 times our money, which is a decent investment for what was an investment both in loan stock and equity. We're very proud of what G Network did. By the time it was sold, they were able to provide broadband to 160,000 premises, and we've sold it on to some very significant infrastructure investors, and those are funds managed by the very significant University Superannuation Fund, USS, and Cube Infrastructure managers. The structure of the exit was unusual relative to other exits we've done, in the sense that the great majority of those proceeds will be deferred and received in 3 years' time, which will explain why we are sitting with a substantial debtor on the VCT's balance sheet. Next slide, please. Clear Review was an unexpected exit in the sense that we realised our investments within 15 months of the first investment. Typically, we would be investing for somewhat longer, and 5 years plus is more typical. And this really was a set of circumstances where our investment in this business, which provided software to assist enterprises appraise and performance manage their staff, attracted a very early interest from Advanced Computer Software Group at a time when the management team we backed were particularly keen to benefit from the infrastructure and resources available. At a 2.1 times return, perfectly respectable return. The unusual feature of this was that it was a shorter hold period than we might normally expect, but not a return to be sniffed at. Next slide, please. So reminder of our investment strategy. We are investing from the early stage, and we call that, so that's very young businesses from seed right the way through to what we describe as Series B, which is businesses with several million of revenue and an established business model looking to scale it. But we do back very specific themes, and just to remind everybody of those, software is a big part of what we do, cybersecurity, but really digital risk more generally. Digital marketing, Phrasey was an example of that, And we now have a number of data analytics businesses which are helping businesses manage the proliferation of data that every company in the land is A, seeing, and B, grappling with. We continue to have a long-term view that healthcare is an important sector. Healthcare has become particularly interesting in post-COVID, particularly in the areas of healthcare tech and digital health. So we've seen some really decent growth within those companies within our portfolio, but also specialist pharma such as Provica, as we've discussed, and other diagnostic devices. Now, we are focused on business to business. We have very limited exposure to consumer. That decision has stood us well during this time of consumer pressure as a result of COVID, and one that we intend to continue. We were Venture Capital Fund of the Year in 2020, which was great. Nice to be recognised. Next slide, please. I'd like to just touch on our commitment to ESG. Environmental, social, and governance is becoming increasingly important to how we invest and how people look at our investment process. As those of you know who've been invested with us for many years, our portfolio has always sought to be socially positive, very much demonstrated by our investments in healthcare, renewable energy, and renewable power, which have been themes for many years. But what we're now able to do through the United Nations Principles for Responsible Investment (PRI) is we are developing the processes to incorporate that thinking into how we make investments, how we manage investments while we are shareholders, and how we set them up for exits. Next slide, please. And I won't go through all the points, but this shows how ESG is now very much part of every stage of the investment process, right from making investments and due diligence through to how we interact and engage with our companies, and then how we look at those ESG issues when we look to exit. Next slide, please. A slide on the charitable activities that we pursued within Albion. We've supported 2 charities this year. WizKids, fantastic charity, which is which is providing wheelchair and other technology for young disabled children. Absolutely fantastic charity doing great work. And we've also supported Generation Genius, which is encouraging STEM careers amongst those from a more challenging backgrounds. And in the first quarter, we've donated £5,000, which is both from Albion activities, but also many of you have contributed because we have donated £1 for every shareholder who signed up for electronic communications and who used the online application process during the fundraising. If I could put in a plug and continue to encourage people, we are very keen to move as much as possible to electronic communications. It is more efficient. It is kinder on the environment, as it massively cuts down the amount of paper that comes out of this business. So if I could encourage people to continue to move to electronic communications, which can be done through the registrar and indeed can be done through their online portal, and we'd be very happy to assist here at Albion if that would be of help. Next slide, please. So looking at prospects, again, the portfolio continuing to be focused on these sectors with long-term growth trends: healthcare, software, education, and renewable energy, and continuing to limit our exposure to discretionary consumer fund. And if we go on to the next slide, we do still have this unknown, the COVID-19 economic impact, but we do feel that the portfolio is well set up, that it's balanced in terms of sector and balanced in terms of stage to manage risk. And importantly, we do have businesses that have shown resilient growth. And I again sort of draw your attention to 3 very important parts of the portfolio: Quantexa, Egress, and Provica. And what I'm very encouraged by actually is the level of new investment activity and follow-on investment into portfolio. There are some fantastic businesses in these sectors. There are some great entrepreneurs coming through, and the general support and assistance provided by government, both through the very substantial VCT scheme of which we are part, but interventions more generally, means that there are lots of entrepreneurs with fantastic ideas coming forward, and we stand ready and with great pleasure back them to grow some really great businesses. First dividend has been declared. That's in line with the 2.5% of NAV, 2.06p. That should be hitting your bank accounts on the 28th of May, so not too long. And as I alluded to earlier, we have just announced our 31 March NAV, and that had risen to 84.07p. So that is a quarterly return of 2%. So that is a great start in terms of delivering our target return. So with that, a huge thank you to all of you for joining today. I hope you've asked lots of questions. The question facility is there. I really am very much looking forward to answer questions. So please do put some questions into the chat. And with that, I will hand back to Ben.
Thanks, Will. Can I commend you for your effort to get the full Albion Capital logo in? You didn't quite manage it, but it was a valiant effort nonetheless. Something to work on for next time. Great. Just as Will said, we have questions from shareholders. And what we'll do now is we will try to answer as many of those questions as time permits. To the extent we're not able to get through all the questions, what we will do is publish the questions with their corresponding answers on the Albion website. So this involves an element of technology, as we need to look at our chat bar to look at the questions as they come through. So we will endeavour to do that. And I will try to ensure that the correct party answers the question. So we've had a couple of questions actually in around the sale of G Network, and it's noted correctly that the proceeds won't be received for 3 years, that there's essentially deferred consideration. And a very good question actually in terms of why is there deferred consideration, what security was taken, and what discount rates were applied, because the consideration is not going to be received immediately. Probably, Will, if you're okay, I'll take that one. This is interesting because this was a sale that was interrogated in great detail at the board meeting. Certainly, we pushed the manager very hard in relation to the decision to receive deferred consideration, and we asked for and obtained and noted that the legal advice on that the board had, that the manager had obtained. I mean, I think what's fair to say is that in any negotiation, essentially you push it as far as you can against the counterparty. And this was in the end something which, as a board, we felt the manager had pushed as far as they could to get an excellent overall economic result. We were reassured, particularly by the counterparts, because essentially when you're getting deferred consideration, your real risk is counterpart solvency and credibility. And I think that given the two counterparts here, we felt very comfortable in the end. And it was the best return and the best outcome for shareholders that was available at that time and in the context of that negotiation. We can put again a bit more detail on that when we respond on the website. The next question, perhaps an unsurprising one given where we were, is will this new kind of live streaming be the format for AGMs going forward? Will, are you okay taking that, because you've probably got a broader view across the Albion portfolio? Is that okay?
Ben, absolutely. And I think, again, I will sort of emphasise the experience, and this applies not just to Albion Development VCT, this VCT, but to the other 5 in our portfolios, that we have seen excellent engagement in the virtual meetings that we have had, and that's not just the AGMs, that's also a hugely supported shareholder seminar, which I think was viewed by just under 1,000 people. So, we and indeed this board consider shareholder engagement to be hugely important. Part of measuring that is how many are we able to engage with, and clearly our experience to date has been great. What we're doing, and we're in the process, is looking at how AGMs could be held in the future in terms of making them more hybrid, and indeed there'll be a resolution coming on in a moment about which allows the company to do virtual AGMs not previously anticipated pre the COVID. So that will give us the ability to run this type of event, but in a far more interactive way, potentially allowing, we hope, live questions, within, rather than relying simply on typed. But there's lots of technology appearing at the moment. We're assessing that technology. We will then be making a recommendation to this and other boards. But certainly one of the options we are definitely looking at is an enhanced version of virtual meetings.
Thanks, Will. The next question touches on the decision to sell Olim. Well, I'll probably take that because you covered it in your presentation. Look, I mean, I think Olim, the decision to invest in Olim was a good decision in the board's view with a bad outcome. We were confronted by a situation where there was an opportunity to seek to get a return from the funds that we had waiting to be invested in a world where, like all of you as shareholders, it's very difficult to get a return from cash. So we had within the Albion stable a kind of a captive fund to offer us preferential rates to make that investment. It was a good decision, but with a bad outcome as a consequence of Brexit and COVID. The quoted equities were not making the returns in terms of income, and they were depreciating in value. It had to be exited. And on behalf of the board, we are sorry for that economic outcome, but actually it needs to be seen, I think, in the round of the otherwise strong performance. And again, it needs to be looked at without too much benefit of hindsight, because at the time of the decision to invest in Olim, there was a unanimous view on the board that it was the right thing to do. There's a question, understandably, about investments that we're most concerned with, particularly Marada and Hustle. Will, can I pass that to you?
Yes, yes, of course, Ben. So, look, inevitably in a large portfolio, you will have companies that are finding life harder than others. And then when you throw in a fairly large curveball in the form of a pandemic, inevitably there will be different experiences within the portfolio as to how they've been affected. Now, the two shareholders who raised this question has picked up two businesses that have had a tough time, and touching on those will just give you a sense of where COVID can hit investments. Hustle was a platform that allowed gym users to access gyms through an online platform. So it was a marketplace connecting gyms with people wanting to go to the gym. I don't think it is a sector that was horrendously hit by COVID simply because they were closed. They didn't even have the option, if you were a pub, to do a takeaway. I mean, you were closed. So effectively, all their supply disappeared and has only just reopened. The team are doing a great job there in terms of developing the product, but unsurprisingly, it has had a significant impact on trading, and our valuation must reflect trading. hence the write-down. Murata falls into a slightly different category. It is a healthcare business and an interesting one in the sense that it's providing AI to allow the treatment of cancer, particularly what's known as contouring treatments, and a basic software that helps plan radiotherapy. The unusual bit here, or sorry, not unusual, the reason why COVID has had a big impact there is that their core customer base for this software, for their software product, was hospitals, particularly in the US. It'll come as no surprise to the attendees of this AGM that selling into hospitals, particularly in the US, where COVID has been running riot, has been nigh on impossible. So the write-down, I'm afraid, is simply a reflection of the huge challenges that company has had continuing to sell into a hospital-based customer base. As a result, they've had to raise money, and they've benefited a great deal from some of the government support available. But that does have a knock-on effect to both in terms of trading performance, but also in terms of the level of investment that is now in that business relative to ours. So those are two examples. I think the broader theme worth making is that on the whole, the portfolio has stood up very well. And while there are specific examples of businesses that have done less well, the vast generality, majority of the portfolio has weathered the storm very well, and indeed have continued to grow in this strange world, hopefully becoming less strange by the day.
Thanks, Will. And I think the next question is one that's obviously close to the hearts of shareholders, which is how sustainable are dividends under the new policy? Yeah,
and look, absolutely, the board and Albion recognise just how important income is to shareholders. You know, the ability for a VCT to pay out tax-free dividends is immeasurably valuable, and importantly, it needs to be at a decent level to reflect that the returns we should be targeting should be decent returns given the venture investments we're making. In setting our target at 5%, and shareholders will recall that is now a 5% target of NAV, which is 2.5% of the NAV at each of the two dividend payments. Set at 5% has been designed to be sustainable in the long term. And if you can look at that in two ways. You can look at it, you know, is that sensible in line with our long-term returns, which if I remind everybody is about 7%. 5% to us feels like a level where there's a balance between paying the bulk of that to shareholders, but also delivering NAV growth. So in terms of how that 5% is delivered, that will be through backing great investments, and then delivering sensible, and attractive exits. And there'll be less focus on income generation from, say, loan stock, given the nature of the move from sort of more asset-based investments no longer permitted under the VCT rules, and the move to higher growth, innovative healthcare and software businesses.
Yeah, thanks. But I mean, that's a common theme, isn't it? Which essentially touches on everything. Well, you and I should get a break, actually, Will, for the next question, because it's coming on the chat line as specifically for Patrick. Should we be concerned about the sunset clause in 2025? Patrick?
So that's a very good question. And by the way, this sunset clause refers to a review by the government of tax-based schemes. So what's my big picture? My big picture is that VCTs are now doing precisely what the government wants them to do. They are channeling money into really very high risk early stage businesses, which is where the future Britain lies, really, particularly post-Brexit. The great majority of our investments are exporters, and they're exporters that haven't been affected by Brexit. So I think as long as we're doing the job, I feel pretty confident. My one caveat is that governments under pressure can do some pretty strange things, and so we just don't know. But of all the things that could happen, that's one that I don't feel too concerned about. I hope that's given you a sort of a fairly balanced picture.
Thanks, Patrick. I mean, it does seem that we're really earning the tax relief these days, doesn't it? Doing exactly what the government wants us to do, rightly so. So that seems fair. Okay, another question that's come through on the line is, what drives the decisions behind whether to hold or realise the highest value investments? Is there a risk they're held for too long in order to balance the newer, higher risk early stage ones, particularly as the pipeline can only focus on early stage these days? Well, I think that's for you.
It's a great question, and it's at the heart of the one of the very difficult decisions, and decisions that we give considerable thought to is hold or sell, to the extent that is our decision. But at the core of our strategy is the principle that we want to back our winners. As we there is a real valuation growth right the way through from early stage, right the way through to even IPO, as people will have seen in some of the recent IPOs going on. And what we want to make sure is that these shareholders in this fund benefit from that value creation through the life cycle of that investment. The other important point to make is that the decision isn't always ours. I mean, we are minority investors, we can influence. What we need to constantly do is balance the risks of holding against the rewards of holding. So, are we better to hold or are we better to sell? And if a business is growing well, it's well managed, it still has a substantial opportunity, then history has shown us that is how we'll derive the greatest value to the fund. And that is the core of the decision making. And I think it is important that there is the benefit of having larger companies within the portfolio. It is a balance to some of the earlier stage. And the pipeline, yes, the pipeline of new investments tends to be earlier stage, but we are able to continue investing up to a certain point in those companies. And it's only really in 2 of our companies in the portfolio now where we've reached the point where the HMRC rules stop us doing it, but that may become a feature in time. So looking back at your question, I think it's a balance, but I think the principle is that there is backing your winners is a good driver of return.
Thank you, Will. I'm actually delighted that the chat line worked and that we got all those questions through. We do, unfortunately, though, have to probably limit it because of the need to get on with the formal element of the meeting. But as I've said, we will continue to monitor for further questions and ensure that those questions are put on the website, again, with the corresponding answers, which hopefully will be helpful for all the shareholders. So I'll now proceed with the formal business of the AGM. Notice convening the meeting has been in your hands for the statutory period. So with your permission, I will take the notice as read. There have been no further questions from shareholders other than the ones we've dealt with, and therefore I will proceed. I would like to point out that as there are only 2 shareholders present in the office, myself and Lynn Golby, these 2 shareholders are the only ones able legally to vote in person. The rest of the board and any other shareholders will be unable to vote, as they are not at the place of the meeting. However, you will shortly see the proxy votes we've received and show that these show that the majority of shareholders have voted in favour of the board's proposed resolutions. I don't intend to read out the proxy votes after every resolution, but I will show them on the screen as each resolution comes up. The first item on the agenda is to receive and adopt the company's accounts for the year ended the 31st of December 2020 together with the strategic report and the report of the directors and auditor. Those in favour? Thank you. I declare the resolution carried unanimously. The next item on the agenda is to approve the directors' remuneration report for the year ended the 31st of December 2020. Those in favour? Thank you. I declare the resolution carried unanimously. For the next resolution, I will pass the chair to Lynn Colby.
The next item on the agenda is the re-election of Ben Larkin as a director of the company, and I have pleasure in proposing Ben for election. Those in favour? Thank you. I declare the resolution carried unanimously. Ben, back to you.
Thanks. Apologies for that feedback. Thank you, Lynn. The next item on the agenda is the re-election of Lynn Golby as a director of the company, and I have pleasure in proposing Lynn for re-election. Those in favour? Thank you. I declare the resolution carried unanimously. The next item on the agenda is the re-election of Lord O'Shaughnessy as a director of the company, and I have pleasure in proposing Lord O'Shaughnessy for re-election. Those in favour? Thank you. I declare the resolution carried unanimously. The next item on the agenda is the re-election of Patrick Reeve as a director of the company, and I have pleasure in proposing Patrick for re-election. Those in favour? Thank you. I declare the resolution carried unanimously. I now propose the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. Those in favour? Thank you. I declare the resolution carried unanimously. The next item on the agenda is to authorise the directors to agree the auditor's remuneration. Those in favour? Thank you. I declare the resolution carried unanimously. The next item is to consider is to allow the directors to allot shares. Those in favour? Thank you. I declare the resolution carried unanimously. The next item to be considered as a special resolution is that the directors be empowered to disapply preemption rights. Those in favour? Thank you. I declare the resolution carried unanimously. The next item, which is again being proposed as a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. Those in favour? Thank you. I declare the resolution carried unanimously. The penultimate resolution, which is also being proposed as a special resolution, is to approve the cancellation of share premium and capital redemption reserves of the company. Those in favour? Thank you. I declare the resolution carried. The last item, which I did mention earlier and again is being proposed as a special resolution, is to amend the company's Articles of Association to enable it to hold general meetings either wholly or partly by electronic means. Those in favour? Thank you. I declare the resolution carried unanimously. Thank you very much. That concludes the formal business of the annual general meeting. Thanks to all shareholders who've joined this live streaming. As noted earlier, the board really does welcome any feedback you have, which you can do by sending an email to aadvchair@albion.capital. And for those of you who are interested in seeing the list of questions and their corresponding answers, these should be available shortly on the website. Additionally, I trust that you were able to watch the entire presentation without connection issues. However, for those of you that have experienced problems during this live streamed AGM, or you would like to watch a recording of the event, a link to the video will shortly be found on the Albion Capital website, alongside the manager's presentation and the formal business of the AGM. I now close the meeting, and on behalf of the board, I do hope you all stay safe and well. Thank you.